Thank you, everyone, and thank you, Julian. With that introduction, I'm not quite sure how I'm going to follow that up. It's certainly been a journey, there's no doubt about that, and we did have a good chat when Julian asked me about would I come along and tell a bit of the Whitehaven story. I mean, we've certainly occupied a lot more acreage in the print and electronic media than you probably would like to, and for a number of different reasons, some of which are very good and some of which are just, fill space. But I thought it was the right time, now that we've been in the seat for a few months now, to come and tell you a little bit about where we're going. There's a little bit of a story about how we got to where we've been today, and then where we're charting our course going forward. And despite the doom and gloom you might see outside in terms of the various commodity prices and their current state of affairs, and I do hear that our dollar's got an 8 in front of it today, so that's a very positive thing. But with that as a backdrop, we have got a very, very positive and compelling story to tell. We are essentially a lone coal play, if you like, as a pure coal play with a large free float and on the ASX, and having been an industry which has largely been consolidated by a number of different players, and some of those players I do see representatives of in this room. So it does leave us in a unique position, and as a unique investment proposition for an industry that we believe has got a future well into the long term. So with that said, let me just get on to a little bit about Whitehaven and where we are. And I'm assuming there's a reasonable degree of knowledge in the room already. So we'll try and get through the presentation and leave some time for questions. But let's kick it off. So the Gunnedah Basin, as you know, it's an interesting basin. It's certainly it is the longest load point away from the Newcastle port facility. So at our longest point, we're about 380 kilometres away from the Newcastle harbour. It's up in the northwestern New South Wales, as you know, and is typified by some pretty unique characteristics. We have very large reserves and resources in this area. The coal quality itself is typified by very, very positive elements. We've got a low ash and low sulphur, low phosphorus and high energy profile to our coals, which is a very nice place to be, and I'll talk a little bit about why that is a nice place to be in terms of where we go in the future. Having a low ash product, we do have a very high yield from not just an individual project's perspective, which we'll talk about Maules Creek in particular, but from a company-wide perspective, we do have clean coals that wash well, and we don't suffer some of the larger yield losses that we know some of our peers with some of their mines in other basins do. We do have a competitive cost structure, so again that number you see up there is a company-wide number. We have projects which are less than that from a strip ratio perspective. We do also have, and we're in the beginnings of a fantastic story in terms of our Narrabri underground mine, a very efficient longwall, which is going to show, I think it stripes this year very, very compellingly that what we've got there is a large-scale operation that is really a Tier 1 asset. And last but not least, but this is an important differentiator I think in terms of other emerging coal basins, is that Gunnedah does actually have infrastructure. So this is not a proposition like the Surat or the Galilee where the projects there are going to have to bear the cost of building infrastructure, and often up to, as we know, 500 kilometres away from a port, and at a time when you're trying to do that with prices the way they are, the dollar being the way it has been for the last 12 months. This does have a real setup here. It's infrastructure that we have got great access to. We certainly believe the capacity to be there for the ramp-up profile that we envisage for ourselves. We've certainly hit some fantastic high points in terms of our railings, even just in this current year. And so we are in a very, very fortunate position of having existing infrastructure. And that is a key differentiator if you're looking at where these next emerging coal basins will come from. So Whitehaven, as a company, being a subset of that, we obviously have consolidated a strategic position in this basin. And Julian's mentioned it, and the history is well known to everyone. There's obviously a merger back in May of 2012, where we brought together basically a very strong and compelling proposition of producing assets in the upper Gunnedah Basin, and also a fantastic portfolio of development assets. And at that time, you need to recall that the time of the merger, Narrabri was in the stage of assembling the longwall on the surface back at the time of the merger. It didn't actually go underground until the end of June of 2012. So that mine, in fact, has got a very, very short history, even measured as we stand here today. And then obviously a cornerstone of that transaction was bringing Maules Creek and its position into the fold. and again we'll talk a little bit about what that does for the company. So we have got a highly strategic position. In terms of our immediate neighbourhood, there's really only one other producing asset in the area, which you can see next door to us, which is Idemitsu's Boggabri mine, and we really have locked up a lot of the potential of this area in what has been, a difficult transaction, you may recall, because it was quite a complex one in bringing the various entities together. But now we find ourselves in a very unique and strategic position, as I say, with our foot on high-quality resources, low-cost resources, and with the existing infrastructure at our disposal. So I'm sure you've seen all these sorts of facts and figures about our individual projects, and these slides will be available on the website for you to peruse at your leisure. So a little bit about where we've been. Where we've been is those blue bars there are typified by our open cut production. So we've been on a growth path for some time, but a growth path in measure, whilst percentage terms has been quite compelling year on year, but off a small base. And you can see what happened in year 11 and 12, where you start to saw the development coal start to emerge out of our what was then the infant mine of Narrabri. And you can certainly see what it did to us in this current year in terms of our volume. Quite a big jump. And so, and that's certainly not. In the case of Narrabri, there's 3.6 million tonnes came out of that this year. Our first year of operation since the commissioning of the longwall, which again I'll just remind you was back in the end of October 2012, so a very short period of time. But you can see what that does to us in a short period of time. Narrabri is doubling the existing production base of Whitehaven in its own. So if you're doubled with Narrabri, what happens when Maules Creek comes along? And you can see there in the orange, that does something very big again. And so that is quite a dramatic change, and we've all seen hockey sticks before in terms of what people will put up as charts about where they're going, what they're going to do and how they're going to deliver upon it. But this is quite real. You can see the green there is already happening. As I say, 3.6 million tonnes from Narrabri in this current, or in this year just closed. In this next year, 14, we'll do about 5.5 million tonnes, and not the nameplate capacity of 6 million tonnes in terms of output, just because we've got a longwall change in February, March coming up. So we're in 2 short panels to start off this operation, then we move out into the longer panels where we've got only 1 change out per annum, and then we'll certainly do 6+ million tonnes. I will point out, but even to get 5.5 million tonnes in this new year, even given that we've got the tail end of a change out that just finished on the 20th of July, and we've got a full change out in February and March of next year, we will be cutting at over 6 million tonnes anyway in order to deliver the 5.5. So that's a massive trajectory, which really is quite a staggering period of growth that this business is going through. And then just to give you a bit of a feel for the product mix that this growth is going to deliver, I mean, there's some very large percentages there in terms of the technical capability of our resources. It's not necessarily a reflection of how we'll be able to sell these products in the end, but it's certainly just a statement about what the technical aspects of these coals will deliver. We can certainly deliver very, very high proportions of semi-soft production out of our business. And we'll talk a little bit about why that's important to us going forward. But the big difference between what you theoretically can do and what you plan to do obviously is going to be the market. And if we were to turn on a fully washed output out of Maules Creek, I mean, we would be talking about 8 or 9 million tonnes of semi-soft. And if you're pushing out of Newcastle currently in the order of 22 to 25 million tonnes it's been, I mean, that's a massive addition to a small market. So that's going to build up over time. So the marketing effort in order to do that is quite substantial. And as a result, we've been building our own internal capability to be able to deliver on that, because the marketing effort will be critical to delivering on a larger proportion of semi-soft into the market. Having said that, there's also a very, very high quality thermal product that comes out of that, and that is certainly something that the market is already embracing, and there's been fantastic interest in taking that from us, and it is a high quality output compared to not just the other coals in our immediate neighbourhood that we've seen in the past, but certainly coals that we see in the Hunter Valley and vastly removed from what you see as in those other emerging bases with the Galilee and the Surat. So if you've got all that growth, and that is quite a hockey stick, and in order to deliver on that, I think one of the first things we observed when I came onto the board, and a couple of my fellow directors came onto the board at the same time, one of the first things we observed was that the company had been in a different state of operation for a long period of time and was now embarking on a fantastic growth trajectory that required a bigger investment in human capital. And so we saw with Narrabri, and again Narrabri was yet to be taken underground at the time the merger occurred, the decision was made to start investing in more internal capability to manage this growth. So I thought I'd just highlight for you some of the investments we have made in doing that, and I know many of these names are familiar to many of you, having known a lot of these people over time as I have, which is a nice thing when you sit in my shoes. But what we have got here is now a really nice blend between the mix of backgrounds in terms of the financial, the engineering, the legal and so on, but also a very compelling proposition in terms of retention of company knowledge about where we come from, but also the capability to manage growth. And if I look at some of these key roles in there, the addition of Brian Cole, obviously, that's a new role that was created at the time. We recognised that Maules Creek is a massive project. We needed someone sitting over the top of it who was capable of delivering on project deadlines for very large projects, and so we brought Brian into our team. Similarly, trying to move that much coal from the longest, the furthest load point away from the port, is also going to be a challenge. And so what we did is create another role and brought in Jonathan Van der Voorters, who, as many of you will know, would have been the inaugural CEO of HVCCC, and he's done a tremendous job in charting our course and making sure we get the amount of pathways we need through the Hunter up into to our load points up in the Gunnedah Basin. So again, fantastic additions, and like I say, a strong and compelling mix between the balance of new perspectives and certainly corporate history. So Maules Creek, as many as you know, I won't dwell on this too long because I'm sure you would have seen all this data in previous presentations. To say we are a fair way away from the port. We've got a rail spur to connect to the existing line, which is only 17 kilometres. We've got a very kind and gentle sort of deposit here that's not going to be too difficult to mine. It does get pretty deep pretty quickly though with this, but we've got a lot of coal there. But that's a very compelling proposition in terms of its low strip profile over the course of the asset's life. And the profile of the coal, very compelling in terms of low ash sulphur, phosphorus, and again I could put up a slide here and benchmark that against the rest of the thermal coals, say for instance, let alone the metallurgical coals that we see coming out of the market, but I think you get a reasonable picture as to what we've got here in terms of the potential for this mine to not just produce a fantastic thermal product, but also swing into large-scale metallurgical coal production. So the benefit of a project of that size is substantial. Certainly we've got a resource that's going to go on for a long time. So the 21 years that I've mentioned just there before in terms of lease life, obviously that's not the end of it. This is a substantial resource and go well past the renewal of the lease. It's got a very compelling washing yield, as I mentioned before. The cash cost, we see this project being one of the key drivers in terms of the economics of it. This is quite a compelling proposition, and I think there's a lot of people in the coal industry at the moment who'd like to have a $67 FOB cost for their product, especially when we've got the mix of the semi-soft and the thermal product. That will certainly mean that our blended price for our output will be very compelling. Now, the other thing we're focused on is making sure we build this thing on time and on budget. So we do have, what we would say is a relatively modest cost of per tonne of annual capacity, installed capacity with that construction cost. So $767 million is not an insignificant amount of money. There's no doubt about that. But for the students of Ashton's history, in order to get 13 million tonnes of ROM capacity installed on site, the Ashton numbers at the time were over $1 billion. Now in Whitehaven's hands, we have re-looked at everything about this project, the footprint, the way in which we're going to do it, the engineering, all the various pieces of infrastructure that would deliver 13 million tonnes, and we've revisited all of that and brought that down to $767 million for the full 13 million tonne ROM capacity. So we believe that is a substantial saving and one which will pay handsome dividends to our investors in the future. So the project schedule, I know you've seen these slides before. I mean, the point about this schedule, I suppose, is make sure that we actually get a start with the various nuances that we'll talk about a little bit later in terms of when our physical start of construction will occur. The longest lead time item for us there is the rail, so we obviously need the rail to rail out. So we'd like to get on that as soon as possible, and there are preliminary works being done in order to do that. Our immediate commitments from this site are thermal based, so we don't actually need the prep plant on site at the time that we actually do that, but we certainly will be putting it on site very quickly, just to ensure that we've actually got the capacity to start putting trial shipments into the semi-soft market. As I said, the marketing effort itself is going to be a fair step, and so we want to make sure that we've got the capacity to be able to deliver the coal to people, and we've got the noise around the demand for the semi-soft component of this in particular is growing, as the project moves closer to fruition. And quite interesting from other quarters which we didn't expect. I mean, China has actually expressed quite a solid interest now in our semi-soft product, which is very exciting, and even more exciting, I think, in some ways, that they've been willing to pay a Japanese-based price. So that certainly was beyond my expectation, I've got to say, when we first started meeting with a few of these people. But that is a very positive sign, and it's a testament to the quality of the asset itself and the output that's going to come from it. Narrabri, I thought I'd just cover off on this. This is a good slide because I know many of you will have been watching what's going on with Narrabri, and this is a good slide because it shows both the prep plant and the tripper and also our bypass circuit working at the same time. So this is fundamental to our strategy going forward in terms of optimising the blends of our Narrabri coal. We can bypass the entirety of our production around the plant if we feel we need to, because the coal is a very good quality coal, and that gives us the flexibility to minimise the costs, both through washing obviously and yield losses obviously. But it does. We can either do that or we can wash the entirety of the production at this site, which is a fantastic flexibility to have. So I thought I'd just throw up a couple of highlights for you in terms of where we've been, and I think again, just to remind you, this has been a very, very short period of time since this has been going, but there's some pretty significant achievements that we've got on the ground already with this, and as you would have seen just recently down the bottom, we've announced that the change-out has been completed for the end of the longwall panel 1. We're into longwall panel 2. We predicted it would take us 6 weeks, and it took almost 6 weeks to the day, in fact a couple of days short. But it was a tremendous effort from a new site with a new team, some of whom never seen a longwall before. So this is a testament to how this site is functioning as a really outstanding effort. So our prep plant has been churning out throughputs now finally at a level which we think it should. Look, that's probably all I'll say about that. It's working the way it was designed to throughput-wise. That's good. Tick that box. One of the real stories of success, though, for us has been the transition from a mine which was heavily contractor-based. When we started, it was obviously during a difficult time of the market, and now we find ourselves in a place where flexibility in the workforce has changed, availability of skilled labour has changed, and so we've been rebalancing the mix between contractors and obviously directly employed personnel, and so we do now have 98% of our operational workforce as direct employed personnel, and as you can see there from our cutting rate in terms of development metres, we have been really performing outstandingly on our development metres. We had 4 continuous miners before. They started out contracted. We now have 3 operating, and we're doing better rates than anyone's seen before on our site, with only 3 continuous miners working. So that is an outstanding achievement. I think you see lots of big longwalls around the country, and I mean lots of people budget to do more than a kilometre a month, but a lot of them struggle to actually get a kilometre a month, and we're doing better than that at the moment. In fact, for the year just finished, we did 16,000 metres. So as I said, our bypass crusher you saw in the photo has been recommissioned, and that was really just a desire to get us greater flexibility in the plant and certainly greater capacity to deliver more than the 6 million tonnes that we thought we would produce from this site. So with the change-out, we did take the opportunity to make some modifications, and you've known we've had a few issues with the longwall, as all longwalls do when they go in underground. So there's been a few teething issues that we've addressed along the way, but things are looking pretty good. The guys have got back into cutting, and the rates of cutting and ramping up has actually been really, really positive. We have had a bit of a come-to-Jesus meeting with our friends at CAT, and that has really quite transformed their focus on making sure that we iron out the bugs in our longwall, and they've been extremely supportive and are on site every day and will stay on site every day until every little wrinkle is rolled out of this thing, which is fantastic. So that has shown a marked change in where we're going. A couple of slides there, just longwall panel 2, the reinstallation phase. There's actually cutting in longwall panel 2, just so everyone can see the gear is down there and doing what it's supposed to be doing. So very positive. Well, I'll come back to this slide because this is actually, this is the hockey stick, and where we think we're going is we are creating here the premier independent listed coal play in Australia, and this path is unique. If we look at our competitors, we look at the project pipelines that others have got coming down that path, we are very unique in this growth trajectory. Now, one of the questions I often get about this is that, do you need to do all that now? And we look at times to be counter-cyclical investors. I can tell you that wasn't by design, certainly not with Maules Creek in particular. We've had a number of well-publicised delays, as you all would have known about that one. So, but we do find ourselves uniquely positioned in the cycle where we are on the precipice of investing a large amount of money in Maules Creek, and we're absolutely committed to doing it, and I'll tell you why that is the case. But let's just reflect a little bit on what the transition that this company is going through. It started on small scale, relatively modest economically sort of positioned products with small mines, a long way from the port, and it is transitioning to tier one, high class, highly efficient and low cost assets at what is probably the worst time in the cycle we could possibly imagine for ourselves to do it. Now, there is a logic as to why we'll continue on that path, but I think we do need to just observe the environmental, and I don't mean it in that sense, but the backdrop against which we're operating. So we've obviously got coal prices which are not exactly flash, and there's lots of coalies in the room here, so I can see they will concur with me at the moment, so that's not really ideal. The A dollar has been over par for over 12 months. I mean, it's nice to see with an 8 in front of it today, but that is an interesting dynamic. Coal prices have tracked down with the A dollar decline in recent months, and that's from an A dollar price of coal perspective, we're probably flat. But we do need to see a decoupling of that decline in the coal rate, which has slowed its downward trajectory, I have to say, which is nice and reassuring. But we do need to see the A dollar continue on its merry way down back to a, what you'd say, a historical rate. And I was getting commitments around the room there just now at 85 cents. And how long? Sorry? Soon. So I know there's people who are saying it's going to go a lot lower than 85 cents, but certainly we think it needs to decouple from the coal price itself in US dollar terms and continue onto its way. I do find it a little odd, just when I read the papers in the morning and, the A dollar's had a bad day, or the A dollar's had a good day and it's going back up. And I just think the reading populace who actually read that stuff, on a daily basis, I wonder whether they're in the tourism industry or they're in the manufacturing industry or they're in the mining industry. I don't think there's too many people going to be too excited about it unless you're buying big gear as we have been doing. But we're happy to buy the big gear at the top, lock that in and then see the price come down and lock in a benefit for the project. We find ourselves in a unique spot, I think, just in terms of green activism, and this is not the normal environmental concerns which we all share, but this is, sort of a more extreme element of that, where they are philosophically, in a contrary position to where we are. Some of these people just don't want coal development, whereas others will say, well, we want it, but responsible, and we're certainly aligned to that view. And we are investing heavily in making sure that the proposition that we put on the ground is actually the most environmentally responsible project we can possibly muster. And with Maules Creek having recently been approved, well, I can tell you that the hurdles that thing has jumped have been extraordinary. So it is, in Australian terms, it has gone through the ringer in the most rigorous process you could possibly imagine. So we think it's a responsibly positioned project. I mean, it just doesn't end there. It's obviously about how you engage with the community we're in, and that's all dimensions of the community, not just those who are supplying to us or the direct employees we have. We've been investing heavily in that, but obviously when you're involved in activism through social media, you can say and do whatever you like, and and no one's accountable for that. We're obviously, many of you in this room, and as we are, highly regulated in terms of what we do and must and should say as formal statements from the company. So I can say that green tape and red tape, has been onerous, and in some ways it sort of blurred the lines between which one's which. In fact, it's just a lot of tape, and green has become red tape over time. So the colour distinction, I think, is almost irrelevant now. It's just there's an ever-increasing higher hurdle, which is a barrier to entry, and that's what they want. If you're looking from a really extreme activism point of view, they want the barrier to entry to get higher and higher. So that's been an interesting dynamic against which to be pushing forward with our projects. Look, I'd say the straw poll around the room, I'm sure, would give life to an assertion I'm about to make, but I would say the confidence in the approval process has been undermined. I think both at a state and federal level. I mean, people look at those processes now with trepidation. I mean, the government should have actual control of its processes. And clearly it's not demonstrating that at the moment. I mean, it is open, it would appear, to all and sundry who've got a bit of an agenda to derail, a government process, which is a difficult place to be in. Now, we think we'll resolve these issues. That's not the issue, but it is designed to distract, delay, cause you to bear more cost and act as a general disincentive to pushing ahead. I mean, it won't work in our context. We're committed to doing it. We know we've got a great project, and we know it's a responsibly designed project that will deliver great results, not just for the regional New South Wales area we're in and the state as a whole, and then the federal agenda as well. So that's we're convinced that we should do it. But what we would like is we certainly would like to see more visible support from the government for our industry and for the resources industry more generally. And I think if you think that you can hide behind the coal bit because the coal's getting all the attraction, at the moment, I think you'd be clearly mistaken because, most of you are digging holes, and digging holes, from some people's perspective isn't great. So if you think the coal guys can bear all this angst just for a little while, just wait until they start moving on to the rest of us. So I think as an industry we've got to get a little bit more organised. I think we have been passive in terms of our response to some of this stuff. It has been quite vigorous. It's hard to actually target who the enemy is at times because they're here, they're everywhere, they're in the ether, in social media and so on. But I do think we've got to get organised. We're not confrontational, is not what I'm advocating, but certainly better organised, more unified, and with a stronger agenda at all levels, and not just at a company-specific level where we are activating ourselves in that regard, but certainly at a state and federal level as well. So that's a bit dire. So I know it's sort of not a great backdrop from which to portray this fantastic growth profile that we've got, but remind yourselves, we have doubled with Narrabri and we have doubled with Maules, and we're going to do it through a difficult time. So why would we do that? We're not stupid. What we are is actually believers in the fundamentals of coal long term as a major contributor to low energy fuels for the future. And we know it's heavily driven by population growth in emerging countries, and they've got the need to grow and develop and the right to develop to this level of the standard of society and standard of living that we enjoy. So we know that this will be a fundamental part of the energy mix going forward. We also know that energy policy is changing, we observe that, and environmental concerns do drive that to some degree. But that's not necessarily a bad thing. I think as Australia is concerned in terms of the quality of coals that Australia exports, I mean that does actually move people's purchasing decisions more towards Australia's coal and away from other coals. And we've certainly seen that in terms of people's issues with sulphur, and we've seen coal coming out of the States which has got a different profile to ours, say for instance, and we see even in China levies already being applied to sulphur content in coal. So we see that, we observe that change. That change does move more towards Australia, but if you look at Whitehaven as a subset of that, our assets in Narrabri and in particular in Maules Creek, our assets are uniquely positioned with a low ash, low sulphur profile to satisfy those needs. And beyond that, we've got Vickery, which is a very large development, which will be our next cab off the rank. So we've got a position which observes the change in regulatory profile. We've got assets which match those needs in the future, and so we think this is a fantastic position to be in. But producing the stuff that matches the needs isn't obviously the end of the game. You've obviously got to have an ability to withstand the storms that we're currently seeing in terms of formal markets with price and FX. So what our stated objective is to change the cost profile of our business, and we are doing that by bringing on these great investments. And what we will see, and it is hard to achieve, and I know there's plenty in the room who'll agree with this, it's hard to achieve significant step changes in your cost profile to make your business more resilient through the turbulent times, and that's exactly what we're going to do. We will see a greater than 20% reduction in the cost of our production with these great assets coming online. And so between our Werris mine, our Narrabri mine and Maules Creek, you will see 85% of our production coming out at $65 average. And that is just an extraordinary position and endowment to have. Obviously comes the responsibility of managing that for the benefit of all our shareholders. But we think that will be a unique position from which to insulate our shareholders from these buffeting times, but also obviously to maximise the margin, the returns to our shareholders over time. So that is quite a unique proposition in this market. Obviously we've got to execute on that, and we've obviously got our more immediate challenges of finishing up the last wrinkles in the Maules Creek process before we start building. But if you look at the industry and you look at the cost profile of the coal coming out of this country at the moment, $65 is a pretty amazing place to be when you've got 23 million tonnes coming out just from these assets alone, and 85% of that is at that cost. That is quite extraordinary. So what I hope is that high note, I'll stop talking and leave some time for